You guys may be familiar with Dwolla. They came out maybe a little over a year ago, basically stated that their mission was kind of to undermine credit card processing. They're a payment processor that offers a 25-cent transaction fee. And actually, I think under $10, there's no transaction fee on money transfers online. And, this sounds pretty good, I guess, maybe to people who like Bitcoin and want to be able to do frictionless transactions over the internet. But unfortunately, Dwolla has been hostile to Bitcoin. They were kind of making news because they may have been sort of trolling local Bitcoins and going after people who were using Dwolla accounts to trade Bitcoin peer-to-peer with other people and shutting their accounts down. Recently, they've put out an announcement saying that they are cutting all ties with Bitcoin-related exchanges. So they don't want anything to do with Bitcoin. If a user trades Bitcoin using Dwolla, if a merchant accepts payments with Bitcoin and somehow that's tied into Dwolla, if somebody wants to send fiat money to a Bitcoin exchange using Dwolla, they're going to be having no part of it. And basically, it sounds like they're scared because they don't believe that they can be in compliance with those magical regulations that keep changing and are so vague.
Listen, the only fake money we take here is green paper fake money.
Let's get that very, very clear. I'll read you Dwolla's email that they sent to their users. This kind of shows, I think, what's going on in the minds of the Dwolla people. Dear user, as you know, Dwolla does not sell, accept, mine, value, take possession of, or hold Bitcoin or any other virtual currency product. And none of Dwolla's users transact business with Dwolla using Bitcoin or any other virtual currency product. However, recent interest involving virtual currency and its exchanges has created uncertainty and confusion around virtual currency and Dwolla's relationship with a small number of its exchanges, and this has forced Dwolla to reassign resources, funds, and services. As Dwolla gears up for a new stage of growth, we recognize we can no longer sustain this merchant base, which is only 0.1% of Dwolla's merchants, and its unique needs, and that attempting to do so jeopardizes both of our communities' starkly different but similarly ambitious vision. Starting October 28th at 4 p.m. Central Time, so they are divorcing anything that has to do with Bitcoin or any virtual currency. That first sentence, man, that was pretty striking to me. Dwolla does not have anything to do with Bitcoin. We don't sell, we don't accept, we don't value, we don't take possession of, we don't hold any kind of virtual currency.
So who do you think they were talking to there, Stephanie?
Who are they talking to? I don't know. The regulators.
We don't hold virtual. Yeah, exactly.
Okay,
they're not talking
regulators.
to the users. That first sentence is a message intended for a very specific audience.
Yeah, it's legalese.
Look, Ma, I got nothing in my hands.
You have to imagine that they're a little bit nervous after what happened to Liberty Reserve. I mean, Dwolla and Liberty Reserve both have that commonality of being a private currency issuer who pegs their currency to the US dollar. Ultimately, it's a private currency, but because it's got that peg, it's like a digital version of dollars, that it's a little bit more efficient because it goes outside of the existing banking system. In the context of the regulation for Liberty Reserve, that meant that they were, money launderers, and that meant that they were the largest money laundering syndicate. I mean, like there was all this rhetoric that surrounded the closure of that establishment. One has to imagine that Dwolla's got to be looking at that and going, "Are we next? Could that be us?"
Are we talking about HSBC again?
No, I think Dwolla thinks they're not yet too big to jail.
Exactly.
This is definitely a legalese statement. It's too bad. I read this and I feel a little bit afraid,
The pattern's clear, right? Regulators and those governments that really don't like Bitcoin or don't want it to succeed can only really regulate the fiat aspects of Bitcoin, the on-ramps and off-ramps into the Bitcoin ecosystem. Or to use another analogy, our inclination so far has been, we'll build an economy up there in the sky and you can have your airports. Screw it, get the refuelers, we'll just not land. Which isn't very easy, because there's all these people on the ground saying, that looks like fun, I'd like to join you, but I can't find any airports nearby. This is the bottom line. The only part of Bitcoin that can be controlled is the conversion into and out of fiat, and that's, of course, the only part that will be controlled. All that means is that the importance of peer-to-peer trading like global Bitcoins is going to be paramount.
It's harder to do local Bitcoins, especially online, though, if you can't use things like Dwolla, right?
Yep.
You got to resort to cash or different methods, and one by one, I think they're going to kind of crack down upon.
But notice what this is doing, right? It's putting into question the fungibility and liquidity of the fiat reserves of all of these services. And just like what happened when Mt. Gox started having withdrawal problems, if all of the exits are barred and the only one that's open is the one that says Bitcoin above the door, you run for that exit. And this is what has happened again and again. Each time the regulators attack the fiat exits, that drives people to buy Bitcoin in order to exit a market and drives the price up. All of this flailing around is really putting to question the full faith that you would have in the financial instrument of fiat. It's basically highlighting how crappy fiat is, how easily it is controlled by financial interests, how easily it is controlled by cravenly co-opted regulators, why it's so important to escape these controls. Basically, they're doing our marketing for us.
Do you think it goes a little deeper than Dwolla being really afraid of these regulators, though? Do you think that Dwolla actually doesn't like Bitcoin because they say, hey, we were kind of trying to do that. We're trying to offer, a payment processing service that undermines credit cards and offers frictionless transactions online. And Bitcoin basically does it better than us. So, we have to find some way to compete with them or take it down.
I don't think so at all. If I'm Dwolla and I'm looking at this, look, I've just built an on-ramp and this is the Bitcoin is a really nice free way to feed into. So from my perspective, if I was Dwolla, I'd see Bitcoin as a tremendous opportunity for growth, profit, as well as diversification over traditional currencies. You don't want to put too many eggs in the dollar basket because Bernanke's twirling it above his head. So you really need to think about how this is affecting the fiat currency reputation. But I really don't think Dwolla is doing this because of self-interest or businessman. It certainly doesn't sound like it if you read the first couple of lines in the email. What that email tells you is, we're scared of being sued, so we're going to throw out the bathwater and the baby together.
I don't know if it's that simple necessarily, Andreas. I think that there really is genuinely very little in it for Dwolla, because just like with the banks, it's a one-way valve, right? Once the money goes through and into Bitcoin, then most of it is pretty much going to stay there because it's only useful as an on-ramp, right? Once you get
I disagree.
You disagree. So you think that it would be a viable back and forth going between these services? I mean,
I don't think it's about the 25-cent fee. This is my point. When did you first hear of Dwolla?
Yes,
when it became relevant to Bitcoin.
Yes.
And the point is that every single person I've ever heard speaking about Dwolla is speaking about Dwolla in the context of Bitcoin. Now, obviously, I have a selection bias in there because I talk to Bitcoin people. However, it's clear to me that Dwolla gained a ton of attention, marketing, and if you like, the Streisand effect by being associated with Bitcoin. And that's a good thing. For Dwolla. So I can't see a scenario because a lot of the people I see leaving Dwolla right now is saying, yeah, sure. The only reason we signed up with you is for the virtual currency. So you're dropping them. We're dropping you.
Okay, but at what cost really becomes the question, because in that note, they say that only 0.1% of their users actually utilize it for Bitcoin, which is legitimately by any standard a very small percentage. And yet they have to maintain a separate staff that is able to deal with the compliance issues that go along with it. So
I wonder how much of their marketing comes from that, though. I mean, it might be a tiny percent of their users, but how much of their public brand awareness comes directly from articles referencing Bitcoin?
Sure, but let's just, to simplify this conversation, I think it's important to try and look at it from their perspective. And from their perspective, regardless of if they're getting a bunch of earned press as a result of this, their perception is that this is a very small portion of their business and ultimately doesn't generate much income for them and ultimately has meaningful costs associated with it. Now, that might be a short-term perspective to take, but it looks like it's the one that they are taking. They're saying we have less to gain from this than we do to lose from this if we wind up being treated like other virtual currency providers who have gone through this identity problem. Because again, that's the issue they have, is that they have a quasi-anonymous currency too that lets you, without getting the identity of the person you're sending the money to, send money to them. That, of course, is a problem. You look at it on that side and you've got companies like Liberty Reserve and Dwolla and, other private currencies, and they have almost nothing to gain from interfacing with Bitcoin in much the same way that the existing banking system doesn't have much to gain. From the other side, an Amazon or some other very low margin merchant has everything to gain, but they can't because there's still this equation in play where they don't understand what the risk is to possibly exposing it, even though there are tangible, almost immediate value to be gained from it just through the lower fees.
Making a rational assessment of the risk benefit of Bitcoin within their business, and that rational assessment leads them to drop Bitcoin. Absolutely.
Right.
Now, the real argument is that because there's not enough benefit? Or is it because there's too much risk? Of course, it's both. But really what I think is happening here is that the risk has been artificially inflated by deliberate attacks on Bitcoin holding companies. And by inflating that risk, it tips the risk benefit equation to a point where people start dropping it. This is not about a lack of benefit or difficulty in Bitcoin. It's all about artificially created risk, counterparty risk, legal risk that's created by regulators.
So is Dwolla just the tip of the iceberg? You know, are we going to see all kinds of companies, payment processors, et cetera, within the legacy banking system just giving the cold shoulder to anything that could possibly be related to Bitcoin?
How would we know it's different from what we have now? I mean, I think that's exactly what we're seeing across the board.
There have been lots of startups that have attempted to deal with this problem of buying Bitcoin one way or the other, buying, selling Bitcoin, however you want to go about it. It really just is a genuinely hard problem because, again, it's an almost impossible situation that we find ourselves in.
Yeah, and you're going to basically recycle these companies every 6 months. They're going to fail and someone else is going to come in, try to solve the same problem, fail, et cetera, et cetera. Now, at the end of the day, there's going to be a pile of failed companies at the feet of Bitcoin because of the actions of the regulators and their attempts to slay the dragon. But we don't care. Hey, we're consumers. That means we get valuable service, even though it's a bit interruptible. If I get my Bitcoin from one company or another, as long as there's someone out there who will keep selling me Bitcoin. So, okay, pile of dead companies. That's the price we have to pay.
And ultimately, this conversation has been really focused on the United States, too. The United States has the ability to impact how the United States plays in this market, but it doesn't really have the ability to impact many other markets besides a more advisory role. And I mean, again, the genie's out of the bottle on this one. So it's more of a question of damage control than it is really trying to shape where we're going on this. We're on this journey one way or the other. It's just a question of, how fast we're going and what the exact directions are we're using to get there.
There's going to be a very important tipping point reached, I think. And that tipping point is where the pain of trying to stop Bitcoin and the obvious futility of that effort becomes much greater than the value that the US government or the US state is getting out of Bitcoin. And hopefully that's a moment of epiphany where other countries are pulling ahead in their Bitcoin endeavors and their Bitcoin investments and innovations, and the US is left behind, not just losing opportunity, but also fighting a battle that is completely wasteful, futile, and in the end will fail.
I've said this a couple of times before, but I think it's worth repeating here. My feeling about what's going on in the US right now is that we are building and proving these models, but ultimately the people who are going to utilize these models are not in the US.
Yeah.
We have the luxury of being able to throw effort at this while it doesn't really matter to us from a functional standpoint. We're figuring out what works. All of these results, once we've generated them in this lab here, go out to the rest of the world and they get to just pick the ones that work. I think that's the good outcome and the good thing that we can do in the US at this point.
You're listening to Let's Talk Bitcoin, the premier audiocast providing news and insights that cover the rapidly evolving world of digital money. Our twice-weekly shows include analysis of late-breaking news, updates on key technical, business, and regulatory issues, and in-depth interviews with the key people driving the new digital economy. Let's Talk Bitcoin offers sponsors an attractive way to reach a targeted and savvy audience. For more information, email sponsors@letstalkbitcoin.com.